Okay, thanks again, Gilbert. It's great to be here. It's great to be back. And number one, I see that there's a lot of other great companies presenting here today, many of which I'm a shareholder of. So it's also great to join several other good companies and join everyone for what's always such a great event. Okay, so Summa Silver, it's basically an almost brand new silver and gold focused exploration and development company with properties in the southwestern U.S. Since I put the deal together about a year ago, we've done two financings, raised $13 million. We're live on another one right now that I just announced on Monday that I'll tell you about a little later. But have since then just been exploring away very diligently on our projects in the southwestern U.S. The first one being in the historic Tonopah mining district of Nevada. Okay, so during this presentation, I will be making forward-looking statements. And this is just the legal slide that has all of the language. Of course, it's available on our website as well. So I mentioned we're focused on high-grade districts in the southwestern U.S. And instead of just going through each one of these points individually, I'll just give you an idea of our investment theory, our thesis, and our mantra. When I was first putting this deal together, I looked at, what could be some of the comparables if I proceed with these projects. What are some good examples of other wins in the market that we can try to not duplicate, but at least use a playbook from. And the example I kept coming back to in my mind was of course Silvercrest Metals. They're very, very recently, I think day before yesterday, out with a great feasibility study on their Mexican silver asset. But go back to about 2015, 2016, and they were a company that was a $10 to $20 million market cap, give or take. They went into one of these historic mining districts in Mexico, two of which, like we have in the southwestern U.S. now, applied a modern focus, a modern exploration focus and techniques. Were very, very successful and of course, are highly competent. But fast forward 5 years and it's a $1.5+ billion market cap company. So I just kept thinking to myself, those are the types of chances I want to take. Those are the types of things I want to invest in. Those are the types of things I want to spend potentially years of my life turning into something good for my shareholders. Okay, so I'll briefly introduce the people behind this. Of course, myself, I'm a geologist. My name's Galen McNamara. I'm a geologist going back about 15 years or so. Really spent 2 years looking for a good project, before I put Summa together, looking for a project, looking for something that I can sink my teeth into, and again, spend years of my life, building into a win for everyone. Before I did that, I was the senior project manager at a company called Next Gen Energy. And of course, we made some very large uranium discoveries here in Canada. And then before I was doing that, I was running the exploration and working on the exploration team at the CB mine, also here in Canada. And we made a discovery that's now in production called the Santoy Gap deposit. That's me. My CFO on Summa Silver is Martin Bajik. He helped me put this deal together from the very start and decided he wanted to stay on as CFO and director because he liked it so much. Technical advisor is Garrett Ainsworth. Him and I worked very closely together at NextGen. So he's a technical advisor on Summa Silver, and I'm a technical advisor at his company called District Metals. Christopher Leslie is my senior geologist. He helps me plan and implement all of the exploration in the field. He's got a really interesting background in that he was one of the co-discoverers of the Blackwater deposit here in British Columbia, which today is 8.2 million ounces in the proven and probable categories of gold. Board of directors, Board of directors, Michael Connert, CEO and founder of Vizsla Resources, and I believe he's presenting here as well. Vizsla, of course, being a very high profile and successful Mexican-focused silver explorer. Brian Gause is a geologist. He's based in Nevada. And then finally, Thomas O'Neill, independent director, is in the insurance business here in Vancouver. So, of course, very importantly, the capital structure of the company. There's 51 million shares outstanding, 59 million fully diluted, and we've got between about $4.5 and $5 million in the bank right now. Now, of course, that's about to change. On Monday night, we announced an $8 million private placement. I'm happy to report that the books on that are not closed, but are full. So please feel free to reach out to me anytime if there's any interest in that at all. But, you know, like the first two placements we did in May, we did $5 million at 25 cents. And then in July, we did $8 million at $1 with a half warrant at $1.75. You know, I'm really happy to say that, you know, Eric Sprott joined us on both of those financings, has invested $6 million into the company to date, and owns 18% of the company. Okay, so the first project is called the Hughes project. Located in Nevada, halfway between Reno and Las Vegas. Now, we all know Nevada as a famous gold producing state. If it were a country, it would be the fourth largest gold producer in the world. But what a lot of people don't know is that Nevada is originally known as the Silver State. And that's because of two famous Wild West past producing mining districts. The first one being the Comstock Lode, and that's up by Reno, although I'm not showing it on the map. But the second district is the Tonopah district, and that's where our Hughes property is. We have the eastern half of the Tonopah district. You know, like the Tonopah district, it really has a great discovery history. It's a great Wild West history, is like what I like to say. It was discovered in 1900 by a guy who was supposedly chasing after his runaway donkeys as he moved from one ranch to the next through the desert, and the donkeys stopped on top of the veins. I don't know if that's the truth, but at the end of the day, the district produced 175 million ounces of silver and almost 2 million ounces of gold at grades of about 1,260 grams per ton silver equivalent. So it's a big high grade past producer. And when the district shut down decades and decades ago, and right around 1950 was when the last production came out of there. Since then, there's been no modern exploration at all. Since then, you know, more or less, most of the exploration focus in Nevada has been on these large Carlin-style gold deposits that are 1 to 3 grams per ton in an open pit and are very large. So for decades, were very, very lucrative to discover. But those are getting very hard to find now, number one. And number two, there's great examples of other successes with similar types of deposits like Silvercrest, that there's a lot of interest in these old Nevada districts now, and we've got a great position in 2 of them. This is the first one. And then the last thing I'll say about this slide is that the property was formerly owned by Howard Hughes back in the 70s. So just as a tip of the cap to the history, we've called it the Hughes property. And this really was one of America's great silver producers of the time, you know, the 1910s, the 1920s. The main past producing asset on the property was called the Belmont Mine, produced something like 40 million ounces of silver and 400,000 ounces of gold at grades of about 1,250 grams per ton silver equivalent. And again, no modern exploration. You know, before we started working here, no one had drilled this mine until just last year when we did it. And, you know, like we're still waiting on about half of our assays from last year's program. But what we have batched out so far has had some very high grade results in the vein environment. So I'll just highlight 2 on this slide: 3,760 grams per ton silver equivalent over 2.5 meters, but also grades as high as 6,220 grams per ton silver equivalent over 0.7 meters. Those are 2 of the highest grade examples, but really what we've got back so far, we've got multiple zones exceeding 1,000 grams per ton silver equivalent over a strike length of about 3.5 kilometers. So there's really a lot of work to do here still, and a lot to follow up on. Okay, so this is just a map of the property. The town of Tonopah is in the bottom left of this map. So the property is, you know, in the town, a little bit north of the town and east of the town. Those square symbols are all of the historic mine shafts. Zooming in on that and just highlighting some of the earliest drilling that we've done, we drilled 4 target areas this year, all of which were successful. The drilling on all of them were very successful in hitting high-grade zones. But I'll just start by highlighting the 2 on the left, so the Murray targets and the Belmont Mine targets. This is the areas that the past production came from, you know, on our side of the district. So in these areas, we were chasing veins that we modeled that we suspected were unmined. And it turned out the thesis was right. I've highlighted some of the results here, but these are just the highlights. There's really multiple veins left here that they didn't get to mining, or extensions of which they didn't get to mining. And it's now becoming very evident that there's lots of juice left to squeeze in this district. So those are the two on the left. The two on the right represent extensions of the district. So the historic mines, they ended more or less between the Belmont Mine target and the Mizpah extension target in about the center of this page. And what happened was those veins that the old time miners were mining ran into a fault zone, and then they were lost on the other side of that fault zone. Now, ever since I started looking at this property, it became apparent to us, to the technical team, that there's no reason that the veins shouldn't continue on the other side of that fault, and that we just needed to find them. So the two targets on the eastern side of this figure, on the right side of this figure, represent exploration targets. We drilled 3 holes in those areas in total, and 2 of them hit. Of course, the most interesting being hole 10, which is at the Ruby target on the far right of this figure. That represents a 1.3 kilometer step out from the historic district mines. It hits 6 zones of mineralization, the best one being 522 grams per ton over 2 meters, with a nice high-grade kicker in there. But also probably the strongest hydrothermal alteration that I've ever seen. Now, mind you, that intersection is 500 meters below surface. But the idea is that if we can get onto something that's Tonopah large, if we can really start tagging the extension of this district, we're really shooting for something big. We're really taking a big swing here. So there's a lot more to understand, both in the near mine environment here and in the exploration environment. I'm just going to skip this slide, and I'm going to move right into comparing the districts to other districts. So one thing I like to highlight about the Tonopah district is that it produced, these amounts of ounces. And I'm going to change to the translated slide, excuse me. It produced these amounts of ounces in here over 4 kilometers. But if we compare those, if we compare Tonopah to some of the famous Mexican mining districts going back 500 years, the Guanajuato, San Dimas, Pachuca, they produced over a much larger strike length, but of course produced many, many more ounces. So I'm just representing that production strike length here with these white bars on the bottom half of this figure. And if we take the strike length of Tonopah, which is 4 kilometers, we add 1.3 kilometers, which represents the Ruby discovery, and even add more, you could double the strike length of Tonopah, and it would fit in quite nicely to how big these districts can get when they get to be truly world-class. So that put it into perspective for me. When we were doing exploration and I was thinking about acquiring the property, that I actually staked a bunch of the claims on the eastern side on the extension myself personally. Okay, so that's the Hughes property in Nevada. The second property that we acquired is called the Mogollon property, and that's located in southwestern New Mexico. It's within 100 kilometers of 2 large open pit copper mines that are currently being mined by Freeport. So a very, very rich mining history in this part of New Mexico. Now, ever since we started Summa, we were really looking for something that could double our chances at having that exploration success. I like the southwestern US. I really like looking at these historic mining districts that haven't really been touched in decades. So option this one, and this one's interesting. It's called Mogollon. It produced between the 1880s and 1942. And production only shut down in 1942 because that's when the U.S. went into World War II. So that's when all silver and gold mining in the U.S. stopped by law. So between the end of World War II and about the 80s, nothing ever happened here. But in the 80s, it was drilled by a geologist who actually paid for the drilling himself because he had been successful in exploration in other areas and really liked this one. And he came up with some really interesting results. The best one being 14 meters at 598 grams per ton at the consolidated mine. But then there's also the ultra high grade is there as well. There's 2.3 meters at almost 2,000 grams per ton in the Clifton area, and a few other areas that were drilled and got some interesting results. So what this really represents here is that we've got a good starting point to where we can return first and start drilling. But I think that we may only be scratching the surface to start because there's 34 kilometers of total vein and strike length on this property. And we have drilling information from about between 1 and 2 of those kilometers. So there's lots of work to do here, but we have a great place to start. So the last thing I'm just going to show on this property is a long section, which is basically a side view of the consolidated mine. But we've got a series of 8 holes in this blue box that I'm showing, both below and beside the old mine, that intersected ore grades over ore widths. Now we can't use these holes in a modern resource. The spacing between them is too much, number one. They're from the 80s. We don't have access to the core, number two. So we can't use them in a current 43101 compliant resource. But what they do give us is a really good guide to where the mineralization is. So one of the things that we'll do this year is step up to this property and start drilling out this blue box to see what we could have on our hands, because I think we're going to build ounces there very, very quickly. So that's the Mogollon property. The last thing I'll talk about is just my planned work program for 2021. Right now, we're waiting on assays for 14 holes for our last program at the Hughes property in Nevada. I've released 15 and we're waiting on 14. So that's about half the assays are still to be released. And of course, the assay labs are slow now. I don't need to repeat what I'm sure a lot of other people have said, but we'll batch those out as we receive them. At the same time, we're not just waiting around waiting for them. We're planning very aggressive drill programs now on both of these projects. I aim to start drilling in mid-March and then continue drilling all year. So lots to come. And of course, finally, we're working on an $8 million financing right now. So please, again, reach out to me if there's any interest from anyone. So that's it. Just to summarize, Summa Silver is really focused on these historic districts in the southwestern US and very, very aggressively exploring them. You know, we're well financed, where we have a great technical team, and we're just really looking forward to a busy 2021. Finally, please feel free to reach out to me anytime. Our contact details are there. I always love talking to shareholders, and I always love getting the story out and telling it to as many people as I can. So thanks very much, and I'll be happy to take any questions now. Thanks, Gilbert.
Sure, Galen, let's maybe in time to take 1 or 2 questions here. The first one coming from Anne, this is asking a more macro the outlook. Do you see the increased political stability in the US now as a potentially dampening interest in the precious metals overall in the short term?
Well, I mean, that's one possibility for sure. When you look at historically drivers of precious metals prices, what I like to look at is the stimulus that is coming. You know, how many billion is it going to be? And we're talking about Yellen and Biden are talking about increasing it substantially. There's really only one way to do that, and that's printing money. You know, that's number one. And I think now with Biden back in power, you know, you're starting to see countries like Iran push it a little bit with, you know, their nuclear programs. You know, I think there's catalysts like that out there, as sad as it is to say, that may cause upward pressure on precious metal prices as well.
So one last one here, is Nevada mining regime favorable to your project?
Yeah, did you mean, is Nevada mining favorable?
Yeah, like in the regime, the government.
Yes, that's a good one. So Nevada is a great place to operate in that it consistently ranks in the top 5 jurisdictions for attractiveness for mining investment. It's one of the best places to work in the world because it has such a rich mining history, number one. And number two is some of the biggest gold mines in the world are there. So the state, the jurisdiction is very, very favorable because they understand, you know, what, you know, like the lucrativeness, the positivity that mining has on society because of the jobs it provides, et cetera, et cetera.
Thank you for sharing with us your update on your story.
Thank you very much. It's always glad to be here, Gilbert. Thank you. Thank you, everyone.